Good afternoon, this is Clark Neighbors with BIS Commodities for the final report for 2018, December 28, 2018. I will kind of give you a quick review of where commodities are for the year here a little later in the report. But while I'm doing that, I want you to kind of think in the back of your mind what commodity had the best performance this year in regards to a percentage uptick, and possibly which commodity had the worst. And I'll give you that update here in a little bit. For the week, corn down 3.5 cents, bean down 2, wheat was slightly lower. Roller coaster week in the energies and especially the stock market with huge volatility. Considering all those major moves in those two areas, the markets, especially the ags, were fairly steady, fairly quiet. The bean market today especially had a nice recovery from pressure earlier in the week. Supposedly the Chinese bought, of all things, rice. Reported they bought U.S. rice. First time ever. So is this kind of a goodwill gesture in preparation for some trade talks, I believe the week of January the 7th, possibly. We'll see going forward, but I think that's something to keep in mind. Also, with the USDA and many of the government agencies being down right now because of the government shutdown, information in regards to soybean exports and many things like that right now. We're running blind based on the government being shut down. So if there's some more Chinese business that hasn't been announced, etc., that's because of the government shutdown. So fairly quiet roller coaster week, holiday type trade, not big movement, some weather issues in the western plains, but otherwise fairly quiet. As we wind down 2018, some highlights would be another huge crop here in the U.S., especially soybeans. Many areas, not all, many areas having record yields and at or near record production for both corn and beans. Record stocks in soybeans, so we continue to see a huge increase in soybean stocks, not only here in the U.S. but worldwide. We are seeing some contraction in the carryout of corn and wheat, namely corn in the U.S. and also the world scenario. And then lastly, a highlight of 2018, just trade disruptions between the tariffs and other things. There's a lot of stop and go, a lot of different scenarios that we haven't seen in quite some time affecting demand from a questioning standpoint of knowing where we're at, but also probably a little negative, obviously, with bean sales because of the situation with China. Way below typical levels for this time of year. So, top commodity for the year in return would be wheat. Wheat's up almost 85 cents for 2018, a 20% return. Corn not too far behind, up 24 cents, about 7% up. Beans in the other end obviously down 70 cents, or about an 8% decrease. The biggest decrease of all the commodities looks to be crude oil, closing the year, and granted we got one more trading day, down near $45, starting the year near 60, so down 25%. Natural gas up 7%. Cattle market fairly quiet, about a 1% increase. Hogs down 15%, tough year on the hogs. As well known, the stock market, S&P down about 6 to 7% for the year. U.S. dollar up 5%. So the old proverbial dollar higher, commodity lower thing, and U.S. commodity index down about 13-14% for the year. That's the UBS Commodity Index Fund. A lot of that would be tied to the weakness we've seen in the energies over that time frame. So again, wheat, biggest performer of the year, up 20%, and the biggest decrease would be in crude. 2019 going forward, global relations are going to be really key. trade situation with China, not only China but Japan and some of our other allies, and how that may factor into things. Secondly, global supply. What do we see as far as production levels going forward? Obviously, South America's off to a pretty good start at this point. We could see some retracement there going in the latter part of the crop as some are starting to trim that crop back some. But all in all, global supply is going to be interesting going forward. And lastly, the macros. What kind of return do we see in the stock markets? From an investor standpoint, global economy, which has been a little slower over the last 3 to 6 months. That's creating some of the pressure that we've seen in equities, and maybe to some degree pressure you've seen in the energy market too. So keep in mind we may see some rebalancing after the first of the year by some of the funds. Some of that rebalancing would come out of commodities that have done well for 2018 and go into commodities that haven't. So the recipient of some of that money looks to be in the energy trade, whereas some of the money coming out would assumably come out of wheat and corn to some degree. So anyway, that's kind of a roundabout summary of 2018, 2019 as we turn the calendar over. We wish everyone a very happy new year, and we will talk to you next week.